What's up, YouTube? It's Louis here. Hope you're all well. That Elrond video that I made for you guys went absolutely insane. I think we had over 1,400 views within the first day. That was my best performing video ever. I have gone over that views wise, but that was the quickest video to get to 1,000 and obviously 1,400 views. So thank you guys for your support. I gained so many subscribers, so really appreciate it. What I said in the video is that I was expecting this to drop to the 20 EMA wherever that's sat at that moment in time. It was the 170 location, but I told you it could come to in and around these wicks, and I would expect a support at $170 to $185, and you can see we load out at $185 over here. If you read over here, the low, you can see the low is $185. So kind of met the area target. So I will draw a little box of support here going to the lowest wick just there. Yeah, so this should actually be green now because we're above it, so this should be acting as support, and then we've got key resistance above us. We were calling for this technical target of 220 on this channel for a good few days, or at least a week before we even got to the target, and I told you guys that once we get up here, it'd be this area that would step in as support. So I said that we could even carry on until 236, and we went literally $4 above that, so amazing to see that, guys. So what I would say is this is actually a very positive daily candle close yesterday. This is a bullish candlestick pattern. We should actually continue this uptrend. However, we can't get excited because the 200 EMA is looming above our head and we are quite close to the resistance. So if this wasn't here, then I would say, yeah, we're continuing to this resistance point, this larger 382. This 382, which I gave you, I said that if we lost this low over here, it'd be very negative for Elrond, and I said this back in December basically. So just show you the descending triangle. Yeah, so the target was the 050, but we could see looking to the left that it was just a small support rather than a very strong one like this 0618. And we know with the fibs from the swing low to the swing high, you like to retrace to the 0618. And that's where we basically bottomed out before printing this double bottom. And for me, the key level in this bull market is this support right here. This is the most key level because I'd say that this here is a fake out and this is you coming back above into support and holding support. So for me, this area of 139 to in and around 130, so this $10 region of 130 to 140, this is one of the most key levels that we want to see Elrond hold above for the continuation in this bull market. Now we have retraced to this high. It basically means that we're pulling back, trying to find support before continuation to this 1618 target. The only way we'll get to 334 is to break above this red box. Without breaking above this red box, we will not go to that target. It is a potential target, but it's not a target at the moment. As long as we're below this red box, we need to see this red box here flipped into the support, become a green box. Once it's a green box, we're going to the 1618 target. You could see that would be a previous high as well, because we like to retrace to each previous high point. You can see that each Fibonacci level is lining up with the previous high, previous high, previous high. So yeah, very accurate, very accurate. This is why we love it. Look, another previous high on the 2.272, and the wick at the 2414. We know that if we fail to get above this red box, we're most likely going to come back to the 050 at 170. What is stopping us from going there at the moment is this support down here with this wick, this red wick at $179. So we might not even go down further because you had wicks downwards here showing support, upwards as resistance, and now downwards. So you actually are holding the 55, but you are caught in between the 55 and the 200. So right now we're consolidating before the next move. If this move breaks above this red box, we're going to our 3-4. But now let's see where this could actually retrace to if we measure from the swing low to the swing high, because we said that once this candle printed, we were expecting a little dump. You did get a tiny one, and you start to continue up, maybe just to test this 200 as resistance before continuation down, because actually since losing this white 200 EMA, you could see nice support here, but you got trapped between the other EMAs coming into this apex, and then you broke out. So the same sort of things happening here, where we're just coming to retest it. You see support, so we bounced. So just testing it as resistance. We did get a harsh wick rejection. Oh, wick to the top, it wants to drop, but is it just trying to fill in the space between here and the 200 before rolling over, or will we burst through it? So I would say that this is in need of a deeper correction. You can see, measuring from the swing low to the swing high, your 618 or your golden pocket, let's say, is the 0618 to the 050, 150 to $165. So this could be an area of support that we would like to see held before continuation in the small market. What could stop you going to this location? This is the most retraceable zone, but doesn't mean that it has to get here. Watch Bitcoin's up there. I go through in crazy detail about validations and invalidations of technical targets, because you can be in a technical target and I could constantly be saying, yeah, we're going to this, but if something else happens, so let me give you a perfect example. When we get above this red box here, you're in a target up here to the 1618 while you're above it. But if you were to lose the support, then you're no longer going there. But if you got back above it, you are going there. So it's all about validations and invalidations. Something can get invalidated, then validated again, then invalidated, then back validated again. It's so annoying, but this is the truth. So let's say we were coming up to the 1414, you were above the red box, basically validating the 1618 target, but then you start to pull back, and I would still have to say we're coming to the 1618, even though it's going away from it. Why? Because you're still above the red box. As long as you're above the red box, you're in a target to the 1618. So even though we're coming down and we potentially might not hold this, I would still have to say we're going to a target at the 1618. But only when you fail to hold it here. So when we come down to here, I'd still have to say we're going to the 1618. Only when you lose it and backtest it as resistance, that is when I can say with 100% confidence, not 100%, nothing here is 100%. That's when I can say with more confidence that we're not going to the 1618 target. Okay, but if you got back above the red box and held its support, we would have to say we're going to here. And then we'd be coming up again. That would be our target. But then if we drop, we'd still have to say we're going to the 1618. And if you lose support again, then we have to say, okay, now we're no longer. But if it gets back above, we're going to it. It's so annoying, guys. I understand everyone's frustration. Do you think I don't have the same frustrations? I'm not the person making the chart. I'm just telling you guys the rules of the chart. It can be in a target to this, but if this happens, it won't. And if this happens, it will. So trading is all about that. If this happens, then this will. If that happens, then that will. So this is why we need to prepare for every single scenario, and we don't maintain a bias. We're ready for bull or bear. We need to make ourselves aware so it's not a surprise when it happens. We're ready for each situation. And that's what we're all doing, to take a calculated risk with the highest probabilities. And right now, I would say that this is a low and this is a high, and the highest probability is to retrace into the golden pocket. But just because it's the highest probability, it doesn't mean it will. A lot of the times when you make a new first wave out of a new uptrend, yeah, you can retrace only until the 382. So this could actually stop you from continuing down to these targets. Even though this is the most retraceable area, doesn't mean that it will go there. You can just come to the 382 and then obviously continue up. We will see the reaction once we do come back to these EMAs over here, wherever they may sit at that time. But at the moment, you can see the longer we consolidate, the more this will jack up. Then you get a little tap and then continuation. But for me, I would want a further correction down, because the bigger the dip, the bigger the rip afterwards. So if we fail to hold 150, which is really where we want to hold, we would be retracing all the way down to the 1, basically creating this reversal wave. What could stop us in the meantime is a bounce off this 786. We know that this is the most key level for us to continue, because this is the true support here rather than this being a fake out. So we would like to see this area over here held as support. So maybe you do lose the 618, get a bounce off the 786, confirm the 618 support, and then we would head higher. You can see that's an amazing double bottom there. If you come down and lose the 786, you would be losing this key low, this key structure that you've now created, and you would be creating this reversal wave to the 1. From here, of course, you can double bottom. We would need to get above the 0618, this nice psychological level of $150 for me to be confident to say we are going to continue up. So until you actually get above that 618, we could actually come back to the 1, lose it, or we might not even do that. We just might straight away lose it, and your technical target would be $69 at the 1618. Now guys, just because this is your target, it does not mean with 100% confidence it is going to go there. If you're looking for guarantees, trading any market is not for you if you're looking for guarantees. What I have been noticing though along the way down in this dip is that a lot of the time it's just coming to this 1.272 target, and then obviously coming back up, holding the one, and basically invalidating further downside. Just like what I explained up here, the same can happen to the downside when we have downward targets. So when you lose this low, you actually do have a target of $69, but it does not mean it will be met. You could stop at 91, you could stop at 81. So let's say we came to 81 and we started pulling back up. I still need to tell you guys we're going to the 1618 even though we're going up. Why? Because you're below this low, and as long as you're below this low, it is right to say we're coming to the 1618 technical target, because this is the confirmation. Once you lose this low, that's your target, but doesn't mean it will go there. It just is the target basically, but we know things can get invalidated in trading. So even though you're coming up now, going towards the one, we're still below it, so we're still going to 1618. But if you now come up and then get above it and hold it as support, then I then have to say we're not going to the 1618. But it would be wrong for me to call that we're not going to the 1618 along the way up, because there was no confirmation that you were going to get above the one and hold it as support. Only when you see the confirmation of breaking resistance, confirming it as support, then we have to say we're no longer going down here. But this whole journey up to the one, we can't say we're not going down here, as you're still below it, because we could just be retracing to resistance, confirm it as resistance before continuation down. Even when you get above it and hold it as support, there's still a risk that you actually come up and then actually fall below and then continue down, have a little fake out basically. I've seen this as well literally in the last couple of months or so with Bitcoin. So we need to really keep our eyes peeled right now, but we now know the levels to watch out for Elrond. Thank you guys for watching the video until now. Please like, subscribe, and help the channel grow to 2k subscribers by the end of this month. Thank you guys for watching, and I'll catch you in the next one. Peace. So guys, these are my crypto packages. Let's bring you over to the one-on-one mentorship, where it's £650 one-off payment. You will get video call lessons with me over a 1 month period. We will do 1 or 2 hour lessons every single day, and you don't need any prior knowledge whatsoever. You can have zero, you can already be an advanced or intermediate trader. My job here is to 10x your learning curve. Everything that I'm teaching you has taken me over 3 years to gather and cost me over £10,000, whether that was good courses, bad courses, mistakes, scams, or whatever it was. It cost me over £10,000 to get all this information that I'm personally teaching you. I also had to pay for my mentor over $2,000 for a 2-hour lesson. So what you're getting for this price is absolutely phenomenal. Now, you also get the 6-hour crypto course included in this price, as well as the signals chat until the top of the bull market. Now let's move over to the signals chat. I wouldn't call it signals. This is just basically a group where I post what I'm personally doing, my thoughts on the market, if I think it's going up or down. So there's daily chart updates, but also, yeah, throughout the day what I'm thinking, or where I'm buying, where I'm selling, where I'm looking to accumulate, or obviously get out the market. This is what's in the crypto chat, and that's £25 for your first month and £40 onwards. Then we can move over to the 6-hour crypto course. There are over 35 plus videos in this. You don't need any prior knowledge to start. You can be beginner, intermediate, or advanced level trader. My job here is to 10x your learning curve, to make you into that self-sufficient trader, to make you into a trader that doesn't need outsiders' help. Not my help, not any YouTuber's help, or any crappy group chat. So if you're interested in this, you also do get a one-on-one mentorship lesson with me at the end of the course, so you can get any questions answered, so you're clear and you know exactly what to do going forward. If you're interested in any of these packages, then please go to my Twitter at Louis_crypto and literally comment down below and just say, Louis, I'm interested, and I'll personally private message you to see if you qualify for any of these packages. Thank you guys for listening, watching the video. Please like, subscribe, comment, and I'll catch you in the next one.